So hopefully you all can see my screen.
We do.
Um, so like you said, Mark, I was just going to give a very brief overview just on kind of nascent technologies in the communication sector. So, even back when the first Austin Powers was released, they wanted to go from volatile chemicals into the communications industry. So, it's an industry where there's a lot of creative destruction, things are always changing, and obviously, we do well for our investors by figuring out what those changes are, a couple of years ahead of time, and investing in the ones that we think will win, and in some cases, shorting the ones we think that'll lose. So, just to start with kind of the lay of the land, the air, and the sky. So the three ways I would break down the communication sector and sort of the infrastructure behind it is, the land. So what is that? That is, terrestrial cable, fiber optic cable, long haul fiber that kind of connects data centers across the country, sort of short haul and last mile, which connects to, your home or your business in terms of fiber and in terms of, again, terrestrial cable. Those are really the two main technologies there, as everyone knows. You sort of have copper DSL in more rural areas still, but that's being disintermediated and are in a lot of cases being overbuilt with fiber, which I can get into. And then you sort of have the air, which is really the wireless networks, right? And this is kind of the middle of the slide here, where historically wireless networks were really just a single tower connecting to a lot of different devices. And you kind of see this transition that's happening now with 5G and with small cells, where you effectively have one large tower, and then you have sort of smaller towers that are essentially, call it on lampposts in NFL cities, and work similar to our Wi-Fi routers in that they'll connect to individual devices. So you're doing what's called sort of densifying the network in 5G. And so that allows more devices to connect to more access points in these small cells. And so that improves speeds, it improves throughput, as we transition to 5G in wireless, and sort of, we have more kind of IoT devices like drones and autonomous cars and so forth. And then the final area is really the sky. And so that's satellites. And, you've historically had geostationary satellites, which are, essentially very large satellites that orbit very, very high up. And the latency, so, the ping between the ground and the sky usually takes quite a while. So what you're seeing is these nascent LEO constellations. And I know, Mark, we talked about this briefly, probably 3 or 4 months ago, in sort of one of these briefings. But the idea here is that LEOs are kind of changing the way that satellites moving. But that's really, I would say, the way to segment out, the communication sector. And so, next step, nascent technology is what's hype and what's hoopla. And so on the 5G front, you can sort of see what we view 5G as. So it's smaller cells, like I mentioned earlier, same chart in the bottom left. It's denser antennas. And so, you have antennas historically that were sort of had fewer kind of antennas on them, and now, or I should say radio access points on them. And now you sort of have a densifying of the antenna. So you have, one antenna with lots of little antennas on them, and each one is pointing in a different direction called beamforming. And so they kind of catch the signal or improve the signal to the phone. And so that's sort of the next, if you think about 5G, it's really a chipping away of sort of all of these different ways to improve, throughput. And so that's sort of the second way. And then the third way is just more spectrum. And that's effectively the medium by which, our phones talk to the towers, our phones talk to wireless networks, satellite dishes talk to satellites. And so by increasing the amount of spectrum that's available, we're increasing throughput. So that's, 5G in a nutshell. We think that's, hoopla. We think that there's a lot of increasing use cases from 5G, from having a more dense, faster wireless network. And that's, again, what I mentioned earlier around drones, IoT, autonomous cars. So we think that's real, that's here to stay. And there's some cool stuff going on. And I'll get into later how we're playing some of these trends. But we think that's real. Like I mentioned earlier, LEO satellite networks, we think there's some, and I'll get into that in the next slide, but we think there's, some hype, some hoopla. I think the hype is really on the consumer front, where you have some of these companies like Starlink that are attempting to basically market directly to consumers. And the way they're doing that is by offering them an antenna that goes on the roof, and especially for people in rural areas, to give them faster broadband speeds. But the antennas are prohibitively expensive at $3,000 to $4,000. So we think that's not really the use case. The real use case is remote situations, remote workloads where latency needs to decline. And again, I can get into that in a little bit more detail. Fixed wireless broadband, I'll get into that, what that is. But we think that's an area where there's a whole lot of hype. And fiber deployments, we think there's some hoopla to it, where in areas where you basically need, in dense areas where it's cost effective to build out fiber to the home, but there's a lot of hype in the market right now about some of the builds that companies like Frontier and Consolidated Communications and AT&T are doing in terms of trying to build fiber to the home pretty ubiquitously around the country. So just a little bit more on the LEO satellites. So like I mentioned before, your geostationary satellites here in the top right, the latency is pretty long, 600 to 800 milliseconds. You get down to 30 to 50 for LEOs. And so, if you take kind of the telecom and communication sector and segment it based on rural and urban, and you segment it based on emerging markets and developed markets. What I would say is for rural, especially in emerging markets, there's real value to the LEOs because you really don't have a lot of fiber connected to the cell phone tower. And so if you were to do some of the backhaul, so what does that mean? So, when your phone talks to a tower, that data has to get backhauled back to the data center somehow. So there's usually fiber that's connected to all, excuse me, all cell phone towers in developed areas, but in rural areas and in emerging markets, especially rural emerging markets, you need something to connect. And so usually that's satellite. But if you're trying to do voice on a geostationary satellite, there's a big latency issue, like I mentioned. And so that causes sort of, lag. If you and I were talking, if any of us were talking on, one of these satellites connected to a wireless tower in an emerging market, there would be a 2 to 3 second lag based on our conversation. So, enabling LEOs to handle that at a much lower latency sort of improves that use case. There's, use cases on oil rigs with drills that kind of need real-time compute to sort of know how to drill and where to drill more efficiently. That's another use case with LEOs. Villages, again, in emerging markets where, you have this Grameen phone concept where there's one sort of phone in the town. If you can replace the geostationary, satellite-based phone with something into the LEOs, that's another use case. Logistics management in remote areas, all of those are sort of use cases for LEOs. And so we think there's real value there, again, on the consumer broadband side into the home. We think that's a little bit of hype. The last sort of these emerging technologies to get into is really fixed wireless. So what is that? So that is basically, this diagram is from a company called Starry that's doing it, and just went public with SPAC. But what they're trying to do is they're trying to use cell phone towers, like you can see here at the bottom, and then put a radio access point on top of the building, and have that cell phone tower connect wirelessly to that radio access point on the building. And then you have sort of a wired connection through the building to light up all of the different, apartments. And, they think that their use cases or their addressable market is a lot of buildings around, multi-dwelling units around the country. They think they can get to 20 to 25 million households in the next 3 years by 2026, or 4 years, I should say, by 2026. I think there's a lot of problems with this technology, which is why we think it fits into the hype category. One of those is that you need direct line of sight from the tower to the top of the building. So, and that gets degraded when, it's a cloudy day, it can't get through trees. And so there's a lot of sort of technical issues with a structure or setup like this that we think really impedes the market. And so we think this is more like, 2 to 3 million households in the country, not 20 to 30 million like they think. So a little bit of hype there, we think, on kind of that fixed wireless technology. So kind of putting it all together, and the opportunities for us and how we're playing all of this. Cable, again, I've talked about this in the past, but cable is, we think, a duopoly into the home. We think that the LEO risk and the fixed wireless risk and the fiber to the home risk is, pretty mitigated and a lot of hype. And so if this really is a regional monopoly into the home with pricing power and market sense around something on the metaverse over LinkedIn a few days ago, and you think of all of the applications that the metaverse enables, that's going to require the consumer to just increase their broadband speeds. And cable can increase their broadband speeds. Charter, for example, Comcast, they have about 1 gigabit per second to 95% of their footprints. And they can get to something like 10 gigabits a second into the home at a cost of between $60 and $90 per home pass. So again, we like businesses where that incremental capital spend is low, but they have, pricing power all the way up to 10 gigabits per second for the consumer, and sort of all of these use cases that are enabled by again, the metaverse really kind of propelled the consumer to that use, to those sorts of speeds. There are greenfield networks that we really like, and so we are in certain ways playing some of the LEO networks, one in particular, 1 and 2 in particular, and where we think, again, you have these more efficient satellites that are going to take share, especially in more remote areas where latency matters. And then same thing on the wireless front. We've talked about Dish in the past, but building this sort of greenfield 5G network where we think 5G is real, and we think there's a lot of use cases in IoT, really kind of creates a great free cash flow story long-term for Dish. And then the last way is really the ground infrastructure. Again, all of the metaverse, all of these IoT products, the autonomous cars, consumers watching more 4K video on their phones through faster speeds on 5G networks. All of that needs to be backhauled, like I mentioned, through fiber to the data center. And so how do you do that? There are companies out there that own a lot of fiber in the ground that we're playing, where they might be leasing out 20 to 30% of their fiber right now. But the nice thing is the networks are already built and they're already connected. So, just like, the last table at the restaurant, right? The incremental cost is very low. So they can kind of continue to lease out the fiber at, very high incremental margins. So again, those are kind of the ways we're playing the sector, but happy to answer any questions if there are any at this point.
Great, thank you, Nitin. And by the way, you should test his technical armor. Some of you are telco people. Questions, comments?
I have a question if I can. So thanks for that overview. And I had a question. We came across a company. They do low orbits, like 65,000 feet up the stratosphere. They're not satellites. They're like airships is what they call them
Okay.
for 5G. Have you come across anything like that? Any
I mean,
insight into that?
Google and Facebook had both been in the past trying to do these balloons. I haven't seen anything on it more recently. I think, again, the problem you have with some of this is if you're backhauling wirelessly, you need that direct line of sight. And so obviously a satellite dish is different because you have this really big dish on the ground, right? And you can beam up to the satellite sort of through what they call rain fade. With those balloons, I think, or anything like those ships you mentioned, my question to them would really be, how does this work in different weather patterns, and what's the max throughput you can get? And I don't want to go on too much, but interestingly, one of the things that I was reading about some of these LEO networks is that when you're talking about consumer broadband, you have a ton of these really small satellites and they kind of create this mesh network, but the consumer's throughput in the home is so large. Charter's talking about how consumers are doing sort of 1 terabyte a month. And so when consumers are demanding so much more, 3 TVs going with streaming Netflix 4K, prime time, you really need a lot of throughput. And so if you were to take the LEO networks and try to use them in more urban areas, they say something like the stat escapes me right now, but it's something along the lines of you can do like 5 or 10 households over a few square miles. So the idea here is that you really can't handle large loads. So I would, again, be asking about the rain fade, and I would be asking about, how much throughput can these ultimately get? And then the last question I would ask them is really what kind of spectrum they're using, because if they, a lot of the satellite spectrum is sort of already being used, and already these orbital slots are already assigned by the ITU and the FCC. So what I would be asking them is what kind of spectrum they're using for this, because if they're using what's called unlicensed spectrum, which is basically what we use for Wi-Fi or like a 900 megahertz cordless phone, that spectrum that everybody can use. And one thing you see is that there's a lot of interference issues because everybody's using it, and that kills throughput. So those are kind of the 3, off the top of my head, those are the 3 questions I would be asking them to really diligence this thing.
Can you join us for lunch on Thursday?
Yeah, I think so. Yeah.
You know where to go, blood dress?
Yeah.
So
I can get back to you. I think so.
Okay. Carry on, Rob.
Yeah, Nathan, thanks. It's Rob Colorina here. Could you speak a little bit about market returns here in this sector, and some guidance as to the patience factor, or are there some things that are a little bit more that are quicker returning than traditional?
So, I think it all depends on your risk level, right? And risk tolerance level. So, I think there's stuff. So the way we try to structure this is, we have 2 buckets on the long side, right? We have what are called our well-managed logs. And so these are businesses that we think are run by great management teams. They're sort of slowly and consistently building over time. And we size those larger because they're lower risk. And we think they're 15, 20, 25% compounders annually. And then we have kind of these opportunistic, what we call opportunistic longs. And so these are the names that we size much smaller. So the well-managed, we size 5 to 12%. The opportunistic, we size 1 to 3%. And so those names tend to be riskier, but they do have a little bit more juice to them. And so in that latter category, yeah, there are definitely investments that you can make more money on short term. But it's sort of the ways to play this. And some of them are kind of on the component side. Some of them are a little bit more nascent technologies. But we try to kind of play it through across the spectrum, but just risk managed by size, if that makes sense.
Yeah, that's fair. Very good.
Other questions, comments? Marcelo, do you?
Yeah, just like the historical perspective is great to meet you, Nitin. I kind of have been in telecommunications on and off for 25 years. And just as background to share with you, I was responsible for the integration testing of the first digital television platform in the world over cable, and then for the first video on demand platform in the world over cable, and also the third massive scale Wi-Fi mesh network over cable, right? So I had to crack all of those hard problems that you get when people say, hey, it works in the lab, and they'll tell them, yeah, but now it needs to work in a stable way with 1 million customers, right? So that's kind of the zone where I was operating. I think that what I said is spot on. Love to continue the conversation.
Yeah.
And I am friends with the Ergen family from Dish EchoStar. And Charlie Ergen actually went to Iraq with them in 2011. Not many people
Oh,
know
interesting.
that.
Okay.
With Charlie and his two sons. I know them from Davos for many years. And Charlie asked me in 2013 to be his liaison, a sort of a point man in the Brazilian project, which didn't happen, right? So this is an interesting story as some sort of a causa mortis dissection of how it fails. And when it fails, you lose a lot of money. They lost at least 130 million just on the licenses because they couldn't find a local partner. So an element that you may want to add to your presentation is, oh, by the way, we are aware of those cases, and this is what we do to prevent investing any money on those. And happy to share more details because it's all public information now.
Yeah, I'd love to. I mean, we are big in Dish. I spent time with him. He was nice enough to spend 45 minutes, an hour with me pre-COVID a couple of years ago, a couple of years in a row. And we think what he's doing is really incredible with kind of this VRAN concept, just like Rakuten and Geo. So I'm excited for the Las Vegas test market too.
Yeah, I mean, Charlie Ergen sort of plays 4D chess when everybody else is still on check. This is extremely smart. And another bit of information which is public, but few people know, is that his dad was developing nukes in Los Alamos. So from the very beginning of his career, he had access to the top generals and everybody that he needed in the satellite space, which is one of the reasons why he went from delivering dishes in a pickup truck to who he is today.
But the other thing that our community should know, Marcelo made an aid request with an idea that we now are supporting, which is to create a mesh network. And maybe it's a pilot project that will go into Ukraine, and 25,000. And if it works, I think it could catalyze millions. It's a very elegant solution. Let's go on. Did you want to say something, Bill, or it's Christian?
Yeah, quick question for you, sort of perhaps in two parts. Then what do you think about kind of the concept of mobile versus fixed base? So as you mentioned, people are like streaming like crazy at home. I'm sure they do it a bit on their phones as well. Then you have, people definitely like outside of the house doing that. So, different technologies. And then sort of perhaps a related question is this whole notion of like a lot of dark fiber that's underutilized out there, and how does that play into all this?
So I would say on the inside versus outside the home, at the end of the day, your cost per bit, so your cost to kind of light up, throughput, outside the home will always be higher than inside the home because wireless will be more expensive than, a wired connection. And so I think that speaks to more sort of wireless bits to be used outside the home because you can command a higher revenue per bit. And so, what that essentially translates to, if you think about just elasticity, right, is that if you're paying more for wireless outside of the home, or for I shouldn't even say wireless, for broadband outside of the home, walk around, you're going to be doing it a lot less. So there's a reason why 80% of, data traffic from our phones actually is used in Wi-Fi in the home where it's free. And so, I think there's so many use cases, again, from IoT, autonomous cars, and so forth, that, you're going to consume a lot of that spectrum in 5G. But I do think that the consumer is going to make the choice to do more in the home, and that's when we think about kind of, again, the metaverse, holograms, all that stuff, where the cost is lower. And so I think, so that's, I guess, how I would answer that first question is there's sort of it's going to be used everywhere, right? And, but I do think that the consumer is going to use more data in the home where it's cheaper. I would say the second point, is really just, and remind me what the second question was again?
Yeah, it's sort of just asking about kind of the installed base of infrastructure and
Mhm.
particularly,
Okay, underutilized fiber, right?
yeah,
So
exactly.
what I would say there is that um, what's beyond my technical competency and understanding, just because it's so much of a black box, is really there was a lot of this fiber obviously installed in 1999, 2000. And so sort of in the dot-com bubble. And the question is, some of that fiber, is that obsolete or not? And, can it handle a lot of the throughputs from 5G? And some of that we just don't know the answer to. The layman or anybody outside the companies doesn't know or at least I don't know the answer to. And so that is kind of I would say the swing factor on capacity. The other point I would mention is that there is a ton of long haul fiber out there. And I think one of the things you saw this with something like a Zayo when it was trying to get sold, and I kind of heard this on the private equity side too, where a lot of these private equity firms all own sort of subscale fiber companies. And the idea was, can we put them all together? Can we merge them with Zayo? And can we actually try to create some pricing power and some scale here? So, fiber was definitely overbuilt in the US. Again, we don't know longer term how much of that is obsolete versus what's usable. But I think the point is there's a lot out there and utilization rates are low. That said, I mentioned data infrastructure and the one company we're involved with. I think they have a really good management team, and I think they've picked off the areas around the country where, one, there's population growth, two, there isn't much competing fiber, and three, the carriers need them to utilize this fiber. And so my point on all of that is really just that you have to pick your spots, because there are areas where there's never going to be pricing power and you're never going to earn your cost of capital. But then there are areas here where, incremental margins, again, are super high, and you can, these companies can make a lot of money on them. So I think that's where it goes sort of business specific, to answer the question.
And can I ask you a different kind of question? We're going to Chicago, we're going to go through Ohio, parts of Ohio, or we call it there's a nutritional desert and there's a comms divide, right? What's the best solution or set of solutions you think? Take the south side of Chicago or some of these urban prairie areas that are suffering.
That's a really good question. I think it's really just infrastructure funding. So one of our investors in the fund is a friend of mine from high school who, was an early employee at Facebook, and his wife is involved with doing exactly that for, the mayor's office in San Francisco. And I think it really, so we've talked kind of through some of this, some of these broadband subsidy issues. And I think what it really, and the conclusion, at least we were kind of talking through, was that it has to be subsidized, right? And I think the infrastructure bill does a really good job of that. And again, I think cable is the cheapest way to pass a home. So you think about, I can give you the example of New York, where there's Charter has connectivity in Harlem, right? It's just a function of connecting some of these buildings and then getting the cable to the consumer. And I think the infrastructure bill has done a pretty good job of that by kind of giving subsidies directly to the household for broadband through the cable companies. And I think cable is the cheapest way to connect because the infrastructure is already there. I don't know who the cable provider is. I should know since I went to school in the south side of Chicago, but
in addition to lunch on Thursday, we need you to come to Chicago,
okay.
to the south side of Chicago on May 3rd. So
okay, sounds good. So I mean, I would say, sorry.
And we have an affiliate at Stonehaven that's focused on this. We should bring him, Michael Falloon. Well, that's a whole.
We should connect them to the cable companies
I'll
too,
back.
because
We'll come back to that one. I don't want to dominate the questions. So other questions? Oh, Adam.
Yeah, I've got a quick question. When you talk about the long haul fiber obsolete, are you talking about that the fiber is obsolete or deteriorated? Because if it's obsolete, we would know that it's obsolete if it was done in 99, 2000, right?
Well, from at least from what I understand, there's sort of this DWDM, which is like dense wave division multiplexing fiber. And that fiber was, dense wave division multiplexing. That fiber was basically done through with kind of more strands in it. But then there's sort of fiber with fewer strands. And again, this is, like I mentioned earlier, I would couch this by saying this is where some of my, technical, competence is lower. From what I understand, there's fiber out there that is just not as good in terms of the throughput it can handle. And that's where you kind of hit technological constraints from what was built in, 1999, 2000. That said, AboveNet, for example, was a company we were invested in. They had some long haul, but they had a lot of metro fiber. And I know they put, and they were bought by Zayo, but I know they put a lot of metro DWDM fiber through their network. And so somebody like that, pretty much, kill the obsolescence risk by just spending more early on. But then they ended up going bankrupt. But the point being, I think some of the fiber out there, we just don't know about the capacity constraints. But that's a good point on sort of fiber being impaired. I'm not really sure. I haven't heard about that or read about that, but I'll look into that and see if that's part of the issue too.
Thank you.
Other questions?
I can just explain what DWDM is. It's pretty much like you have the light going down the fiber. You cannot bend it with sharp angles because otherwise you lose the signal strength. But DWDM is almost like you creating a rainbow of different colors that travel at different frequencies down the same path. So the actual fiber doesn't degrade really. It's glass plus a few other things to dope it. And you just change the equipment on both ends, right? So you can, in principle, replace an old DWDM system because they've been around for 20 years with a newer one, but you don't have to dig and pull the fiber or fix anything in between. So these are the kind of the broad brush kind of perspectives on it, but they're solvable problems with the right amount of capital invested.
Fair enough. Tim, do you have a question? Anyone else? We got all it figured out? Well, how's it playing out in Europe, Christian? If I can call on you now. Christian.
In Europe?
Yeah.
So you mean in terms of the Ukraine crisis or in general?
I was thinking more telecom, but you can go.
Telecom, yeah. So maybe so I have a question actually. So when it comes to security, I think we haven't talked about this. When you construct new networks and think about new ways of communication, how much do you think about the security of the networks when you construct them, and how important is that? Because you haven't mentioned that aspect at all.
I think you're right. I think that's a big problem in the industry, and I think that's something that needs to be solved. I know the companies are obviously working on kind of cyber protection, especially for, if you can get into a number of devices. Everybody kind of remembers the hacked smart refrigerator, right, in that example. But I think you're right. I think that's a problem that definitely needs to be solved, and we don't know how that problem is going to manifest itself.
Yeah, because when it comes to 5G, I think the problem just gets bigger and bigger.
100%. I mean, and we haven't found any great ways, I think personally, on the cybersecurity front, at least in the public markets, to play that trend. So if anybody has any thoughts, let me know. I'm always looking for interesting businesses in that front too.
I have a question. I might have came in a little bit late, so it might be why I had this question. But I was former director of mobile in the online trading industry, have thought a lot about the progression of mobile telecom. Recently started thinking about mobile telecom performance relative to Wi-Fi, right? Basically, just kind of like random thoughts. And where I just have gone mentally is just completely forgetting about the landline and almost expecting, 100% communication driven through 5G and what comes beyond that. And so is that the overall thesis of where you're coming from, or?
Well, it's interesting that you say that because so if Tom Rutledge, who runs Charter, one of the things that he says is that when he looks back at the landline industry, 25, 30 years ago, and he compares that to the wireless industry today, he thinks that that basically the wireless phone side of things are going to shift in the same direction as wireline phones. And so what does that mean? Charter and Comcast are now the two largest wireline phone companies in the country because they basically offer you wireline phone, home phone for almost nothing. And so what you've seen is that the cable companies, and I'm sure Marcelo can speak to this too, but the cable companies, they've done a really good job of what Charter and Comcast have done, and I don't want to get into too much detail and inundate anyone, but or bore anyone. But basically, what they did was when they were rolling out Wi-Fi routers into the home, they put multiple radios on those Wi-Fi routers. So I can go over to Mark's house and uninvited, of course. I can go over to Mark's house and even if he doesn't share his Wi-Fi password with me, because I have a Spectrum, a Charter phone, I can actually, offload to his Wi-Fi router because there's a second radio in there for every Charter or Comcast customer because they have a deal. Every Charter or Comcast customer out there. And so again, like I mentioned earlier, 80% of our phone data usage is actually indoors on Wi-Fi. And so Charter has almost no marginal cost on that because it's on their own network. And so what they've been able to do, because and then they have sort of where they infill, they roam on Verizon, but they've also been buying their own spectrum in their own markets to kind of create their own wireless network, Charter and Comcast both. And so the reason I bring all that up is because now, I'm switching my wife over to from T-Mobile to Charter because for an extra $25 a month, we get a second line. And so now their pricing is $120 for 2 lines, 2 mobile lines, and 200 megabits a second of broadband. So you're and comparably, if you were to go to Verizon or AT&T for that same package where you go to cable for the broadband, you go to them for the phone, you're paying $200 a month for the exact same deal. So they're bringing down that cost and they're basically commoditizing wireless phone. And so again, we think for somebody like a Dish, it doesn't really matter because there's so many IoT, 5G, autonomous car use cases for that to soak up that demand. But we think on the phone side, to your point, wireless service is just going to get commoditized by the cable companies. And that's part of our thesis on why we own the cable companies is because they're going to be able to retain the customer for longer, get some addended revenue stream that's high margin, and kind of own wireless phone too, for what that's worth.
Well, that's interesting, but you're predicting a continuing trend where mobile devices themselves get commodified or subsidized the same way the digital landline consumes.
Exactly. We think it just history repeats itself with wireless.
No, right. And I agree with that, but my thought process prior to hearing your perspective was that would give an advantage to that provider, the mobile provider, the telecom provider. And if he becomes the preferred pipeline of communication, then every ad model that subsidizes communication that goes through a landline inside a home, all that money jumps to the mobile spectrum. So,
I think it goes back to just kind of who is the lowest cost provider, right?
Well,
and how much
in terms of consumer preference, right? I understand, but So that's A, but the thing about the anybody who's sitting on mobile, but you're describing a world where cable is entering into mobile too. So essentially they're a mobile provider. They have all the same information as everybody else. They're competing on the same path. So it makes sense, but because it's a mobile device, the mobile the telecoms can partner with fintechs and disrupt credit payments in some way, shape, or form. And that's a major part of the market that has yet to come through and affect the economics of the consumer. So if it happens, it could happen so fast that that cable provider doesn't have the lead time that you suspect is basically the way I thought about it before I came into this meeting. So
Yeah, no, it's interesting. I mean, I guess I go back to the fact that the lowest cost producer wins, right? Especially, I
sense.
think cable has that infrastructure to be the lowest cost producer in wireless.
That makes a lot of sense. None of it is played out in terms of production, but one of the potential innovations of blockchain technologies is the use of the NFT specific technology to represent an access gateway that might be able to prevent the need to ever create passwords again for specific types of networks. And who knows if there would be a solution that would be capable and trusted for, communication like, this impactful, right? Like I always imagined it would like show up in a little nascent business that didn't matter. You know what I mean? So it's like, I have no idea when that technology can make it. But if that works as proposed, then the problem of cyber seems like it's gonna trend downward. But it's unproven, but there's a thesis in the market.
Gerald, do you want to say something? Can I force you to say something? Uh-oh, you were laughing and then you went mute.
I can share a story if you
Oh,
like one.
oh, 2 seconds. Gerald, if you see the universe is saying we're going to let Marcelo tell a story. So go ahead.
It's just to give you food for thought in terms of how strange the economics of the cable industry can be if they notice inflection points and act upon it. When we were deploying this massive Wi-Fi network with 1 million subscribers, exactly what Nitin describes is a Wi-Fi community, right? You don't even know that someone is using a modem. They connect to the signal, but it's completely firewalled. They're not consuming your bandwidth as they would with some other technologies. And it works beautifully. But the most impressive thing that I still find amazing today, more than 10 years later, is that they got that network for free. And they'll explain that. And this is actually the main reason why I created my first nonprofit, Broadlight, which we're now deploying in Ukraine. And what actually happened is that there was consolidation in the market. So there was one big operator owned by a region, buying 7 smaller operators, and they basically had to replace everything: the fiber backbone, the modems, and all the equipment in between, including, of course, DWDMs and everything that goes and the full supply chain. And when we acquired the equipment, we decided to go for a modem that had this Wi-Fi community capability. It costs basically zero, right? It's just a software feature. And it was part of sweetening the deal, getting that feature to be activated. And the other side, which was the network backend, was provided by Cisco. And Cisco back then had a lot of experience doing Wi-Fi in airports and football stadia, whatever that was. And they decided that they wanted to get into the cable space. So they literally gave their platform for free via a series of rebates for tax reasons. So we got the Wi-Fi community capability at no cost. Cisco gave us the whole backend, like all the servers, everything for free effectively. And the customers had to buy the new modems. So they were the ones paying like $100 for something that costs us less than 50. So that was also covering maintenance costs. And all they had to do once the network had been deployed was to turn on the Wi-Fi community. So it literally cost them zero to have a mobile network or Wi-Fi network that allows you to have the mobile offload covering 1 million people. And it's just something that would never happen in any other industry, right? It's the weird dynamics of telecom.
Well, I'll catch up with you offline on this, Marcelo, but I'm toying with Ubiquiti as a short. If this whole WISP market gets, the hardware gets commoditized by 5G hardware. Be curious if you have any thoughts on that, but I can
Happy to.
message you
Did
offline.
you see Tim write that down?
Yeah, I wouldn't short it now. I'm not there yet.
My one comment is they'll give you a lot of names, but it's how you get in and how you get out and when is just as important.
And we're not short it now, so I'm not.
Maybe may I add one more question
Please.
concerning data ownership. So again, from the European perspective, of course, we care a lot about GDPR and who owns the data, and you try to install a system where the individuals actually own and control the data out in the cyberspace. So from your point of view, obviously there's not a lot of incentive of solving that problem because a lot of people earning a lot of money with it. But if you wanted to solve a system, who in the value chain could really make a difference?
Yeah, that's a really good question. And I think that I feel like we all think this, and I was thinking about this when Aaron was talking through just sort of the fintech side of mobile. If any company that can figure out how to better target advertising to the consumer is going to win, right? And so I'm trying to answer that question and figure out where it happens. One area that we're looking at, and we haven't really fleshed out the thesis yet, but we're thinking about the OTT streaming side, right? You have so many streaming services, but how many streaming services is the consumer going to pay for? And so, as your third, fourth, fifth streaming service, you're not going to be paying the monthly subscription fee of $15-20 a month for it. So, do those all go ad supported? And if they're ad supported, how do you get the data to better target the consumer? And if you can get that data, where does your CPM go for those ads, right? Because that's no different than digital advertising, and it's much more efficient than linear television ads, right? Where we're all getting the same ad regardless of who we are and our profiles. So agreed. I think there's a lot of ways to be watching who can kind of stick ads and who can capture that consumer data. I think the cable companies obviously know who their consumers are. They have the mailing addresses, the email addresses. They can stick that into some of these companies that sell all the data that matches cookies, like the name of the company escapes me right now. I think Livewire, I think that's it. But some of these companies that sell that data, I think that the cable company can effectively match with their consumers, get more data, and potentially push ads. At this point, I don't know the answer though as to who really wins on kind of the ad-supported side.
Christian, was your question about profitability, or was it about more
regulation,
privacy and regulation?
Yeah, well, I'm actually thinking about a system. I've seen also a startup that was trying to do that, where I as an individual actually own the data, and where I as an individual can actually control who gets access to the data about me and how much they need to pay for that. So, that would turn the whole system upside down, right? Because so we really say that the individual owns his or her own data and then controls it and sells it to others.
So that's one moment, Aaron. We're seeing a couple models that we saw DeFi, we're seeing DeSci, decentralization, lots of things. But I don't know what the term it would be, but it's like a D. I'm not sure what the other syllable is. Go ahead, Aaron.
GDPR.
No, that's what it is. But I'm looking for I'm just being.
So we're attacking this exact problem. Our thesis is that, Christian, your solution, the economic incentive, comes out of banks to offer it, right? To give the customer ownership of their data, even if it's simulated, and then act as a broker who both performs audit on said data requests and then also helps you monetize said data requests. And then that carries over to the advertising side, because they'll now turn and monetize through the other side through opt-in style advertising.
Did you say bank,
Okay.
Aaron?
Yeah, a bank.
That's interesting. So basically the
So-
bank would act like a data broker. So
Right.
they establish a marketplace where I can sell my data over their platform.
That's exactly right. So we're calling it preferred finance, but we're not looking at it to be called PrefFi as an industry standard or anything. But that was the thesis of the business, was driven by that desired potential behavioral change from the user, right? Which the current cryptocurrency customer, that's actually an important parameter of their thought process. And so if we could leverage their desire for that feature into a solution and then demonstrate the power behind it in just a single bank, then who knows, who knows where it could go from there, right? And so the other key of it is that you turn the bank's authentication into a federated ID the same way Facebook has Facebook logon or Facebook login or whatever the name of it is. And so it's just a direct competitor against that. But so that's, I mean,
Now,
that's, yeah.
now Gerald's ready to talk.
Well, I was just gonna say, if you can hear me,
Yep, yep.
just to Aaron's point, I was looking at this 23 years ago when I was in alternative payment technologies at the old First USA card services. And we had this idea, because we're geniuses, we had this idea back then. I think what you'll have to navigate there is running into banking commerce laws, right? The regs make that difficult, but if you can navigate that, then yeah, it only makes sense because you have the convergence of all this stuff across kind of, one set of, it's centralized in one place and then it runs over the same kind of rails. So anyway, I got a hot, but great morning, great session, and thank you for the input. We'll be
Thanks,
following
Joe.
up.
Appreciate it.
Yeah, Gerald,
On infrastructure stuff as well.
we'll talk to you soon and we'll see you soon.
Yeah, thank you. Thanks, everyone.
Anyone else perspectives on this? I heard the word bank. I've been having such frustrations with the larger banks these days. Maybe it's more the neobanks that were.
What's the frustration?
Oh God, it's very simple. Just, and the turnaround times, even mistakes. These are all the banks that, I don't want to name them here, but all the ones that we work with. And yet, you can do some fun things on top of their old plumbing, but it seems like it's right, and insurance, we see a lot of the technology is ripe for disruption. I don't think they might provide the plumbing, but I don't think the front line interfacing is going to come for them.
I wish I had more insight into whatever the pattern is that you see.
We're here every day. I know.
Yeah, no, all right. I'm gonna follow up with you.
Yeah. This is open architecture. We're all just trying, it's a learning community trying to figure it out together.
Yeah, that's awesome.
Remind me, who introduced us?
Gerald.
Oh, well, there you go. Of course.
Yeah, this is my first time coming into one of these meetings. I knew that they happened, but they weren't on my, they never came up on my calendar.
Well, for others, it comes up too often on their calendar. So it's,
Yeah. But I'm based in Chicago.
right. Yeah, we'll definitely be. And we've been not negotiating. We've been discussing, there's going to be a discussion on Thursday and tomorrow as the final shape of the Chicago agenda. And I've been arguing for a fintech, but we're trying a new model where the community shapes it.
Okay.
More than I do. So you can join that. Gerald's in on that. You can.
Okay. It's important to note, based on all the stuff that we talked about, that the company itself, Preferred Finance, is launching out of Bermuda, and it'll be regulated under their monetary authority and not the U.S. So it's not a Chicago. And the purpose of that is at a high level, if we're going to be very forward in terms of what we're willing to try in terms of blockchain enabled financial products. We don't want to be constrained, right? So that's one part of it. And then secondarily, we already know right out of the gate the SEC would not allow one of the features that we think is incredibly important, which is basically the ability for offshore companies to be able to raise money from offshore markets if they want to construct their token raise using, or their fundraise using some form of token asset, right?
So
The SEC
offshore to offshore?
Yeah, so if it's offshore to offshore and it's outside the SEC, then the 1933 Securities Act doesn't apply.
Right.
Right. And so everybody who's sitting in the crypto market, maybe they should be trading NFTs and buying what they're buying. But I believe that eventually that market will start to come back towards, early stage PE, early stage VC, those types of things. And hopefully I can enable an offshore, basically tech world or science IP world, right? Those types of businesses don't need geography per se.
Yeah, lot of dimensions there.
Yeah.
I'm hearing, Bill Deukler's on, knows these dimensions as well. Nitin, from some respects, Christian. I sense a deep dive here in the making, a couple of panels and breakouts.
Yeah. I just didn't want anybody to think I was getting ready to head and navigate through the US regulatory system.
Yeah, no, we're all in it. I'm part of a broker dealer, so which since you're new, our rules are there's no pitching, all teaching, but we do market securities, and we know and we do it different ways. And yeah, we've had a lot of discussions. If you go to our YouTube site on blockchain, crypto, I think what you do, DeFi broadly, it's just a matter of time. It's revving up. There are others here who we also have the crypto Kool-Aid gangs. Which,
Oh, really? Oh, nice.
nice or not nice, but it's a fact.
Yeah.
But I think but they play into the DeFi crowd. They definitely provide some fuel. Any other thoughts? Nitin kicked off another great discussion. Joseph, coming on camera. Back off camera. All this plays into the decentralization themes that you and Paula focus on. Oh, there she is.
Yes, hi. Hi. He just called me actually because he mentioned that this might be interesting for me.
Yeah, the crypto stuff you guys are talking about.
Well,
sorry, I missed one part, but I'm here now.
Oh, Christian kicked it off with, Nitin set the infrastructure themes, and Christian talked about security and then privacy and ownership and monetization, which took it over to Aaron, who's got a model, of who are the best people to either, there's regulation and there's sort of, facilitation / monetization. He said it could be banks. Well, the banks are broad. You have a lot of different types of banks, and he talked about one that's being shaped up outside the U.S. But the themes play to what you talk a lot about with decentralization. In fact, we've been looking at some, not only DeFi. You mentioned DeSci in a way, Aaron. We've been looking at those models of late. You're living it. You're creating it, Paula. So I just told Joseph you should be listening. But she has a 6-month-old. That's why she's on mute. Just so everybody knows.
Yeah, I don't want to interrupt with small babies in the background. We were actually in our community. We were talking a lot about I think this also plays into the situation. So I'm trying to build a decentralized autonomous organization that is functioning like a nation. So it's people who are organized on a database, and it's doctors, it's teachers, it's logistics experts. It's a little bit like 361 firm, and they meet, they coordinate projects together. And so one thing that came up recently was the meaning of food, and thereby also of soil, because it seems like I think 80% of I think it was 80% of the soil that is usable to grow fresh food on it will not be usable for longer than I think like 30 years or so, because it's just not in a good condition. And so it seems like a lot of research goes into thinking that yeah, the next wars will be around food. And I think personally, also as an investor, I will focus a lot for my daughter. As you mentioned, I have a 6-month-old daughter. I will focus a lot on soil and on food production. And for the community, I think that's very important to buy real estate and to create healthy nutrition. And I'm not sure if cryptocurrencies should effectively be linked to that, but it might be an interesting thing, but I'm still looking into effective governance schemes for decentralized communities, because we're all kind of like in and out of the old industries as well as investors. For example, there's like very new investments also in the crypto industries, and then there's very old style investments. Like I'm from a old family office, and so I have a foot in new industries and in old industries as well. And I know a lot of people who juggle it just like I do. And so it's just so much at the moment, I feel. And I'm interested in governance processes that just try and sort of reduce the complexity. But yeah, sorry that I missed a part of the conversation.
One thing, Paula, is we have 2 or 3 really smart funds focused on ag tech, regenerative ag. You mentioned soil, which takes us back to water, which came up, and all of these are on. If you go to youtube.com/361 fund, you'll see. Just search for those words. To me, we need like the summit we're doing in Chicago. This is what I want. I wanted to have the roundtables for the ag tech. You got the fintech, some of these cute core technologies that are important. The DeSci people joining, because there's so much technology that could be a solution. If we could channel it, I think DeSci could be a means to that.
Mm-hmm.
But we're all
DeSci is short for.
I mean,
what is DeSci short for?
Well, decentralized science, broadly speaking, but there are a lot of different models, people going at it. And I still think you need just like our community, when we make investments, and like you've seen us in philanthropy, we need Marcelo to write a proper memo, which he does, and then we vet it and we use it as a pilot project. It's almost like a venture project, and then we put our shoulders behind it. Someone's leading, and that's why I think what I don't want is this clubbiness that no one's leading. Maybe it's a different theme we'll talk about later. I was part of a family office that did things, we made mistakes, but sometimes if someone has to lead. That's why I'm talking to Marcus Furman today, and he wants to make sure that someone with discipline went through this process, and then he'll put his final ticket in. So that's also needs to be part of the model, which requires curation, but also a community as a check, bad actors, and we sort of bubble up the people that we know that are really smart, and we try to get behind them. So I think that's why community is important in all this. I know I'm observing you show that in your ecosystem too.
I appreciate that. Thank you very much. I mean, yeah, we are trying to live that here. We have 14 houses here on the island of Samos. And we're only, as I mentioned, 1,000 meters from Turkey. So we are very heavily affected by mass migration. We have all the space. We're welcoming international guests. Some of them are also in the call today. And we're, I think, active in different areas, as I mentioned, also in soil or in humanitarian aid. And we're really trying to walk the walk here. And it's going to remain interesting, I think. So let's see where we can all go together. And thank you for the compliment. I really appreciate that. And I'll need support and good advice going forward. So please,
Well, I think
let's keep talking.
I mean, I some of the terms we've been using is co-creating, right? Together, leverage each other.
Mm-hmm. Yeah. I mean, one thing is, for example, that, we don't know about schooling systems for the future as well. Like, what are children supposed to learn in the future? My daughter is 6 months old, and we want her to see a lot of places around the globe, like also to envision what travel is going to look like how our kerosene situation is going to affect travel in the future. How is travel going to change in 6 years' time? Are people going to travel the way that they actually travel now? And is she going to be homeschooled? Are we going to start our own school? Elon Musk started his own school. Like, there's a lot of change in local systems at the moment, and it's like these kinds of discussions I would love to have with people as well. And you just mentioned water. Like, we live on an island? Should we even drink the water as it is from the island now? Is it clean enough? How long will it be clean enough? How can we measure it? And yeah, should everyone be measuring the air going forward? These very practical questions that are basic, but they're also quite sophisticated, I guess. And I don't know how many people are interested in them, but we certainly are.
Well, I think it goes back to, that's why I don't like to go to direct deals all the time, finding funds who look at 1,000 deals, all these technologies. There's a technology with measurement there's a company that's been in our events called Spout, faster, better, cheaper way of measuring the water. And I bet if I ask Kim Colt, some of you know her, very active investor, LP, now setting up her own GP. That's why I think with our community, you got to intermix the funds and the entrepreneurs. You have to find that right balance. If it was all funds, and lawyers, we might not get anywhere. But we need the entrepreneurs, like people like Aaron, apparently. But you still need Nitin to back them. And Marcelo's got a lot of interesting things. EastX, a connector. Michael Daly makes sure that all the accounting is transparent. Part of our Anderson 360, the one firm. No, not transparent. A little bit. It'll cut. Talking about transparency in media. Go ahead.
Well, where I'm headed is taking the accounting and technical financial stuff going forward to help single-family offices find assets under guidance or assets under God, so that they optimize the impact of their legacy.
That's interesting. I mean, also with like, how do you raise a baby maybe vegan? Like, I'm not sure if I want to give meat to my baby, and immediately the doctor told me to feed meat to my baby, and like, who can I have the discussion with? Is there a lot of research out there? And like, I don't know, like there's it's
well, we touch Impossible Foods and Beyond Meat type people. So we could find a circle. We can do a 360 around any of these subjects.
And we can have Oprah represent beef. I mean, she's into it.
Yeah. I mean, I have tons of questions about the next generations, and I'm also interested to deploy capital myself.
Come to Chicago. We have a next gen panel in Chicago.
I have a problem with my visa at the moment because I gave birth in the US, and so I overstayed my visa. I was there as a invitee of the UN, and I stayed too long because I had to give birth early. But maybe I'll get my visa back soon. I could also try and get a business visa if it's a business invitation. Do you think I could?
Well, yes, we had an event in Ohio, and I wrote a letter to Angela Gorin, who came across the Canadian border with my letter.
Okay.
But you could be a speaker. In fact, a little update for everyone, we're not going to rush off to Ann Arbor on May 4th. We're going to actually push it to the fall and have a football game associated with it, Go Blue. So we're not.
Michigan?
Yeah. And so we're going to do that later. So we're not in a rush to leave Chicago. We could go deeper on the next gen, and even that whole, I think we're trying to crunch the agenda into, we're having a South Side tour, which you can see it's sort of a microcosm, very unique one of some problems that I think people and technology hopefully can fix, and some infrastructure spending. You mentioned Nitin, and then we go up to Winston and Strawn, talk about the zeitgeist of Chicago and their industries, and then the next day is a bit about philanthropy, and then impact investing. In fact, there's a really great company in our ecosystem called SharedX. It's a former Kleiner Perkins partner that has this regenerative ag. And if we can use their kind of technologies, we actually, you do a number of things. You get more productivity, but you also have, it's replenishing that soil that you were talking about that needs it, not with more chemicals, which is the track of the 30-year life that you're talking about. And it's like everything, like energy transition can't be black and white. Can't get away from fossil fuels. Look at Germany. Interesting discussion from Peg Wyatt yesterday. Many of you know her. She was sitting next to a German, Michael Spett, and talking about, the chemical industries. They must have gas. We can't get the US gas in, LNG. We don't have the terminaling. And she was saying, well, what do you want? What do you need to drive the cars as much as you do? Can you not change your lifestyle to vote with your lifestyle? Which we're also lazy. So it's a lot of questions embedded there. Yeah, I'm excited. We'll have two full days in Chicago. I think it'll be it's good to get out of New York too.
What are the dates again? When is that?
So May 3rd and 4th, I still have reserved, which is going to be completely hypocritical for me to say this, but we have a racetrack outside of Chicago that we could use, but maybe we should do something. We like to do fun, like that, like we were talking about pickleball.
A racetrack for cars or for horses?
Cars, but I think we've been having a new tradition to play pickleball wherever we go. And I bet we're bringing it to London and Monaco. So you probably haven't even seen it. It's coming. You have something in Europe called paddle. It's a faster, harder game. But pickleball, everybody can play from 6 to 90. It's with a wiffle ball. So maybe we'll get a wiffle ball game that afternoon or the 2nd for those that fly in in time. That's probably more fitting than driving cars, wasting fuel.
Yeah, I'll get in touch with my lawyer tonight anyway about my allowance to get into the US. So it would be really cool. Everyone who's in the call, I'd love to see you.
You should know Jack Wyatt, who's been very quiet, is a contributor to our telecom mesh. I introduced Ann Mooney, but it was Ann and Jack who kicked off. I said, I'm going to put 2,000 in there. Like, you can count on us for B2, for having that call in 40 minutes with John Bellamini. Jack keeps saying, don't go to Chicago, come to Ohio. I say, go both. Jack, do you want to make a case for Ohio on June 2nd through 6.
Well, the case for Ohio is simply compelling. Rationale to follow. Watch for memorandum.
Very succinct, Jack, very succinct.
That he either goes 20 minutes or he goes 20 seconds. So
Can we do both? Can we come both?
yes.
Chicago
So-
and Ohio?
yes. So
Oh, yes.
So those are new. We have in Ohio, we're gonna be on the Kentucky side on the evening of the 2nd, looking over the skyline of Cincinnati. There's gonna be pickleball practice and instruction on Friday morning, the 3rd. There's a lunch at Queen City Club. We're going to Centrifuge, which is the hub of venture capital in Cincinnati. It's also associated with Queen City Angels, which is the #2 angel club of the country. There are 200 and plus of them. And then we go to Cincinnati Reds game, where our friend Jack is an owner. And then into the evening, we have other traditions. And then
Actually, Mark, the itinerary is so dramatic, so inspiring, and so compelling that one needn't go any further than what you just indicated. I mean, this will be constant motion stimulating mind and body.
this is true. And on top of that, back to the body, we are having a soccer/football game at our college campus where Jack and I went, Denison. It's the 361 community against the varsity men's and women's alumni of my college, followed by best ball golf, followed by dinners in Columbus, followed by pickleball mixer with 18 courts, followed by the final round of the memorial tournament, Jack Nicklaus's tournament, followed by a rooftop cocktails like last year at the Columbus AC, followed by allocators only breakfast, and then a full day of conferences, a lot of roundtable breakouts, and our traditional dinner at Jeff Ruby's. Someone mentioned don't eat meat. You might make an exception that night, followed by Cleveland, which is a really interesting city where I practiced a lot one time. And you've got the Rock and Roll Hall of Fame, interesting industrial innovation up there. And then we by that time we're so like worn out that even anybody can beat me at pickleball or ping pong or both.
When you consider the Mark strategy hinges on followed by, there are so many followed bys that it really argues for pulling out all the stops to participate in every single followed by. Why would anyone want to miss any of those? And the answer is no thinking person would.
That's right.
Well, the biggest risk is it'll be oversubscribed, and it means we'll have to share more joy.
That's right. Jack has this amazing part of the Red Stadium that I think we only occupied 20% of it last time, Jack, with 50 people. We could definitely put numbers in Cincinnati. But we'll also go through the West Coast in July. We're going to be in East Hampton in July, and then we slow down a little bit in August. And then we're in London. We are in Monaco. We might go to Berlin and Samos, and then we'll go to October 21st to 25th is our equivalent of Davos in New York. And there will be an Olympics that weekend. The Olympics might have trivia and games that only I can win, but it's okay. All right, with that said, I think we've got the makings of a few other deeper dives coming out of this one. I hope Stephen Burke, I don't know what I don't know what I hope. Is he should we hope that he's out of jury duty so that he comes back? He does have a vacation plan, so that wouldn't be good if he misses vacation, right? And then he deserves it.
I think he can get out of it.
All right, well, he would be for society, he would be a great juror, but for us, was what we all need him. All right, well, Thursday lunch, tomorrow, 10:30, meet up here to brainstorm and talk about events that are coming together. So thanks to all.